Hey, real estate rock stars, welcome to the whole enchilada of real estate investing, the only podcast that serves up the full feast of street smart strategies to build wealth and take control of your financial future. I'm Lou Brown, and I've been in the real estate game since 1976, so I've learned how to make the whole plate worth it. Each week, I'll be dishing out creative financing hacks and proven systems that help investors build multi-million-dollar businesses. No fluff, just the good stuff, straight from the source. Ready to dig in and start making deals? Let's get to it. Welcome, everyone, to another edition of the whole enchilada of real estate investing with Lou Brown. And today I have Lauren Rogers with us from the great state of Washington. And she is an investor up there. She does multifamily. She does all kinds of interesting things. So I think you're going to learn some great things from Lauren. Welcome.
Thank you so much for having me. I'm very excited to be here.
Excellent, excellent. So tell us a little bit about yourself and how long you've been in real estate and what your focus is.
Yeah, absolutely. So I got into real estate about 2.5 years ago. I have over a decade of tech experience selling software at different tech companies. Worked at AWS, that's Amazon Web Services, for almost 7 years. So was really in that realm, and then was getting paid primarily in RSUs, had a lot of stock options, and started thinking about some alternative investments, was actually listening to a lot of real estate podcasts. And my mind kind of started spinning, and I was just like, I think there's a better, more tax advantaged way to build wealth, and I want to explore that, which led me to my now real life partner and business partner, Alex, who was also at AWS. So we had a lot of mutual friends. We were introduced because I was thinking about buying a small apartment building. And this person was like, you should probably speak to someone who knows something about that. And I was like, that's a great idea. I will do that. And then it quickly became very clear to me that, hey, while this is a great strategy, it's got a lot of complexity to it, and it would behoove you to work with someone who's an expert in this space. And Alex had been buying real estate for 15 years while also working in tech, had built up a pretty impressive $30 million stack of apartment buildings across Washington state. And he was in the place where he was wanting to go bigger with that and start raising capital. And he'd had a few family and friends get in on deals, but lots of people were asking to partake in this. So that's when we branched off, and we worked on it, while keeping our corporate jobs for about 6 months. And then once we had everything stood up, we left tech to, work on Veritas Equity Partners full time. So and we've done 5 acquisitions in the past year and a half. So that's where we're at now.
Okay, wow, that is amazing. And definitely you gave some really great advice right there. You said, hey, you were looking at it, and then you said, hey, maybe I should get some education. Maybe I should do this right and consider that there's some things I can learn before I make any big mistakes. So I love that advice. Second thing was that you are able to tap into capital stacks. You're able to qualify different markets for money, and you've been able to do kind of the big stuff, apartment building. Did you jump right in? Is that the first acquisition you made, was apartments?
We did. Yeah. Our niche is really the $2 to $10 million building. We focus primarily Snohomish County and Eastern Washington. And up here, that's, between like 20 and 60 units. And we just think that that's a niche that is pretty untapped. Big institutional players don't play there. It's too big for a mom and pop. Someone like me is not going to go probably buy a $4 million building, in my first whack. You're going to start with, a duplex or 4 or 6 units or something. So we play in that space where there's a lot of operational improvements to be made. And that's really where Alex has cut his teeth. He started with 8 units, but then quickly went to 20, 30. His biggest is 62 units. So he's been operationalizing and self-managing these for 15 years. And so we just kind of decided to replicate what he's seen work because he's done really well in that space. And a lot of successful people that we spoke to really affirmed, like, yes, that kind of middle market is a sweet spot that you can still find really great deals and you can buy from some unsophisticated operators and things like that. So that's where we started, was just basically exactly what he was already doing. And we were like, let's just do more of that. It's working.
Do more of that. It's working. And I love the way that you said operational, focus on operations. And I love what you said about self-management as well, because that's another thing where you're leaving a lot of money on the table, guys, when you do hire outside management. I'm not saying it's a bad idea. I'm just saying that there's a lot of money involved in it. And either one, you can self-manage your own properties and save a fortune, or you can manage for others and make a fortune. So you can kind of have the best of both worlds there. Do you manage for other folks or just yourself?
Right now, just ourselves, although we are starting to take it external. It's not our bread and butter business. Like, we really do want to stay focused on raising capital, managing our own buildings well. So that's kind of a secondary thing for us, but we will slowly expand that. And we do have the ability to take on third party, but right now it's mainly our own stuff. And we just started that about 5 months ago, taking our own buildings in-house and getting way better results. So it's still new for us. So that's why we're kind of slowly, to offering it to other people. But I think we've built out a really good process and we've seen some incredible results. And exactly what you said is true. Like, some of these property management companies are taking a very big scrape, right? They tell you that it's 7%. And then when you go in the contract, you're being charged for legal and HR and software. And you're like, wait, this is like a 12. And also, I think just no one manages your building. No one cares about your returns and your building the way you do. So for the sake of our investors, we were spending so much time whipping property managers anyway that we were kind of like, we should probably just do this.
You felt like a babysitter, didn't you?
Exactly. We were
Wait a minute.
babysitters. Asset managers are basically babysitters. Yeah.
You had to go out there and learn that for yourself. And I'm a big believer in self-management. One of the things we developed is, the difference between what your underlying financing is and what your rent collections are. That's your profit. And then we developed 25 profit centers over and above that. And as a result of that, thousands of dollars more per unit per year because of providing other services to your clients. So I'll be glad to share that with you. But definitely there are ways in the self-management, but also when you hire outside management that you can really enhance what you're earning on properties. So it's a great share there. I appreciate that. Now, in your area of the country and in other areas of the country as well, one of the big things that rears its ugly head and really can compress the investment is this thing called rent control. What kind of advice and what kind of insight can you give us on that thing?
Yeah. Yeah. So that's new for Washington State, but it was coming for a long time. So it was something that we were underwriting into our models just in case it passed, knowing that that was, a big possibility. And it did. I would say it kind of gives us a playbook of how to do things. I'm not personally for rent control. I think it hurts the people it's trying to help because we see now a lack of development in our area. From my perspective, that's actually good. I'm not saying I want it, for people to not have a place to live in Washington, but when you own existing assets and permitting is way down, that just means that my buildings go up. People need a place to live. So there's that. I would also say that we very rarely come across a deal where our rent control is basically a little over 9%. We don't underwrite increases. This isn't New York rent control where you're really prohibited. Like, we are not increasing the rent more than that, even before there was rent control. We're kind of going,
So it's like,
it
okay.
doesn't matter. I mean, you just really very rare to find a deal that's that low on rent to where you would need to be increased. And we have five-year holds on our deals, sometimes 3, depends what the market does. So we can, we kind of try to go as fast as we can, but realistically, it doesn't change our business plan at all to have rent control. And in fact, I think it gives us access to better deals because some people are scared. People didn't want to buy here as much. But if you're a good operator and you know what you're doing and you understand, we don't want to rent gouge people. Like, our whole thing is like, we buy workforce housing that's 15+% light currently on, where market rent should be. And we just bring it to median rent. We don't need to go above that. We're not doing A-class stuff, so hitting those projections with rent control just gives us a playbook of how to operate, and there's a little more regulation, a little bit more in the property management stuff. You need to be attuned to the laws, so there is an overhead component there to navigate. But if you're a good operator, that's really shouldn't be a problem. So I actually think there's more advantages for us than harm.
Well, I like what you pointed out, that rent control, it makes the politicians look good, but it's not necessarily a bad thing if it's actually exceeding what normal landlords would raise the rent for anyway. So it
Right.
kind of like makes the politicians look like they had a win.
Mhm.
And, it's a funny thing about
Mhm.
politics. You elect people that really have no business background, have never operated a business, have never signed the front of a check. They've
Mhm.
always signed the back of a check, and they really don't know how business works. So it's a very good advice for everybody. Just be careful who you have making your decisions. Be careful who you vote for, because they can put ridiculous things in place, really, truly, that can squeeze the entire economy. I mean, as you said, not building, not taking out permits. Yeah. Is that going to impact? Of course, it's going to impact big time all the jobs, all the people that are renters, and they just don't get that cycle of how business really works. It's an interesting thing. Now, how do you think the current market is going? How does the current market look to you?
Our market here is very solid and quite frankly has always been solid. I'm not saying that it doesn't fluctuate, but we are headquarters to Costco, Microsoft, Amazon, Starbucks, Nordstrom. There's huge Meta and Google offices because all these tech companies want to be close together to poach the talent. We have some of the best healthcare in the country. We have the Port of Seattle. So that's part of why we live and in Washington State and why we buy in Washington State. This is one of the strongest economies. And I'm just a believer in strong economies. I even think when San Francisco went down, and it was like, oh, like the whole city is falling apart and don't buy here. I was thinking in my head, like, man, I wish I had some extra money and I would bet on a place like San Francisco too, because that's an economy that's not just going to disappear overnight. And now these AI companies are dumping billions into that market. And that is also true for Seattle, where, we're very stable. So it's not this thing like, oh, the population is exploding. And that's kind of why everyone went to Arizona and Texas and these Sunbelt markets that are now, some of those operators are having problems because a lot of those people also move out of there, or it was just this influx and then everyone kind of chased that. That's not our game, right? We're saying, hey, Seattle has been a stable apartment market and a stable economy and a place that people want to live for a very, very long time. And now we are having a shortage of permits. And with everything with tariffs and whatnot, it's hard to build here. You can basically only build up, right? Because we're landlocked and we have a lot of environmental protections and a lot of water and just not a lot of space. So if you look at all these things, I'm like, we have a supply problem. A lot of people want to live here. It's a really beautiful state. The global warming is helping us. The weather is actually getting better. So I'm like, yeah, we foresee that people will want to live in Seattle. Microsoft just invested billions in their Redmond campus. They're not going anywhere. That means Amazon's not going anywhere. That means these Google, Meta, their big offices. I don't foresee that changing, so that's
That's
why.
interesting. Definitely in your area, that is true. And it's so wonderful. I just love that area. I've been there many times as a speaker and enjoyed just the wonderful atmosphere that's there. So I definitely agree with you that there's a lot of people that want to be there, and there's a lot of people that are going to continue to invest there. So it makes a lot of sense for that. Now you are an owner operator, and you're kind of looking at deals from a different point of view. How do you typically find your deals?
It's a little bit of it's two things. I would say always relationships, right? So that's another reason to invest with a local operator. One, we're from here. We understand the areas down to the streets when it comes to evaluating deals, but also we know the people who own the deals, and we have really, really strong deal flow, which I think is one of our advantages. The more I connect with operators in other states, there is a lack of good deals in some of these markets that are going through a transition period. And we get we get more good deals than we can buy. We would love to have more capital because we're like, gosh, dang it, there's another great one that's going to slip through our fingers, right? Because we don't have the money. But it's coming directly from families or small institutions that we've bought from previously, and then also brokers. So I would say it's a mix. And from my time in real estate, I think before, like my partner was saying, he'd never bought something listed until this year. And in his opinion, so I don't really have the full context, right? Because I'm new to it. But he was saying, yeah, in my opinion, actually, some of these listed deals that brokers are bringing us or, quasi listed, like maybe they're not live yet, but it's being brought to us by a broker. They're pretty compelling. So I do think there is beauty in working with the best brokers, and especially if you commit to closing, we never get something under contract and don't close. So we respect the brokers, they respect us. We work really well together, and they're bringing us serious buyers. I think when people try to do this cold calling, door knocking, you get a lot of tire kickers. And when you're doing a 90-day close, like you don't want to waste your time. There's a lot of value in knowing, hey, this seller is real, we're real, and brokers facilitate that. So we have a mix. We've bought, a couple off-market deals in the past year and a half. We've also bought, we're under contract on a one that was listed, and the one we just closed before that was listed and brought to us by a great broker that we have a really good relationship with.
Oh, great, great. Yeah, definitely relationships are one of the great ways that we do get deals, guys, and connecting with brokers, connecting with real estate agents. They do find opportunities. They can bring them to you. And that's one of the ways that we find deals. Of course, we definitely shake the trees and love off-market deals that, as you mentioned, that nobody else knows about. And I kind of call it going to the auction and you're the only bidder.
Mhm.
It's a nice way to do it. And we do a whole cost to sell process where we actually sit down with the sellers and go through all the costs that it's going to cost us to sell their property when we go to sell, and educate them in that whole process. And it really helps to identify the right price for the property. So that's a great option and a great opportunity too. All right. So tell us about AI.
Cool.
Tell us about what your thoughts are on AI and how that's going to impact us.
Yeah. Interesting time, right? I mean, first of all, you can't AI your way into a house. So I do like real estate because part of what drew me to that originally too was like, okay, cool. I can touch it. I can provide housing to people. It is a real asset. And I think there's some beauty in that, having come from the tech space where it's, you're selling codes and algorithms and it's a pretty complicated thing. But I do think AI has already had some real advantages for our business, I would say, with underwriting and analyzing deals. Certainly, like we've built a custom model. We used Claude. We also have one in ChatGPT, but Claude was we thought was better, and it probably took us 10 hours, but we have a lot of custom prompts, and it's gotten pretty sophisticated in terms of how we underwrite. I'm not going to, it's probably 90% of the way there, but it makes it so we can certainly get a first pass at a deal, really fast. Also, dumping stuff into it to say, am I missing anything, helps from an asset management perspective too, when you save your projects, right? And it has the history and the context, and you have your custom built prompts. It's very helpful. On the property management side, we also built a chat bot where people call and that's their first pass, and it will, they'll say my lights aren't working, and it will take you to the breaker, and it knows where that all is, and it tries to get people to kind of fix their own problem before it submits a work order. So lots of ways that I think AI is going to be really helpful, and we're always, looking and interested in the new tools, but those are a few that have already been certainly advantageous for our business.
Wow, that's such great advice that you can ask it some things, and one of the things it does is kind of ask you and makes you trigger and think, have I looked at this? Have I looked at that? Have I looked at this other thing? Because, just kind of winging it, sometimes we miss things. And some of us, also all of us, have certain, blinders. We
Mhm.
blind sides. We literally don't see something that's right in front of us. Somebody else might see it, like a coach, for example. That's one of the reasons I love coaching, is because I can talk to people and talk them through things, and they go, oh my gosh, I never saw it from that point of view. I never heard it that way. And so it's kind of a fun thing that AI does its thing, but it's not everything, right?
Yes. Yes.
How often do you find AI 100% accurate versus sometimes off?
I think it depends on your model. So when we were first using Claude for underwriting, I would say it was off at least 50% of the time. And like wildly off, yeah, wildly off fewer, but if it in little things, it would be off almost every single time with something, in terms of how it was underwriting. I'd go back and be like, wait, that seems, so it's taking forever to check it. And now I think it's 95% spot on. Granted, that took a long time to build it, right? And to prompt it and to keep going through and saying, no, you're looking at this wrong. No, I want you to look at it this way. No, these are the assumptions you need to make, no, 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 for hours and hours and days and days and days. But in it, the cool thing is it's teaching itself too. So I'm sure with every deal we're doing, you can see the progression. It is really an incredible thing. Underwriting used to take us a long time, even to do a first pass, right? And gives an owner or a broker a thoughtful response. Well, now we can do that really, really quickly. And then that last 10%, that we need to dive into, we got to do our own analysis, right? And then some of it's still art and science, and even AI is not there yet. It doesn't know some of the things that I know about Edmonds or Everett and the exact streets. And that's where some of that, local knowledge is really important, and experience. And we can say, but it's cool that it calls out something like, hey, water bill seems really high, just right away. It's like, yes, I would have caught that eventually, but it's nice that it knows, like, oh, all your other deals, it's this, and now it's this. You should ask about that.
Well, Lauren, that's great advice. And definitely, I would also advise that everybody really takes a hard look at the information you're gathering, and have you asked it the right questions? So you're advising us, look, when you get into it, it's actually building a dossier about you and about your portfolio and about the kind of questions that you've asked it, and it's kind of customizing those answers for you. So it's an interesting experiential time that we're going in right now, and also that contrast of, hey, and there's things it doesn't know, right? So about markets, about certain things that we know that are attractive to buyers and attractive to the market as well. That's great stuff. So Lauren, you have given us a world of information and advice. Now, somebody that's just getting started in the business, what would you say to them?
Not to brag on myself, but I think my path was pretty wise. Like, try to team up with someone that has more experience than you. If you can add value in a different way, maybe you have connections, maybe you have a lot of hustle, maybe you have capital, something that you can bring someone that's been down this road and kind of glom onto them and learn from someone who's done it. And then the other thing is, or just go do it. You could take the Alex method, and he came into a couple $100,000 when he was 20 years old from a tech company selling, and he parlayed that immediately into apartment buildings and then just did it. And I think that's also awesome. Now, he would tell you, I made a lot of mistakes. There was a lot of heartburn. I wish I had a mentor, maybe done it with someone to learn from them. But at the end of the day, you learn from doing. So I think, all these courses and podcasts and whatnot, that's great. It's not going to get you really that far, in my opinion. You got to be in there doing the work, because you're going to learn things every single day. You are going to make mistakes regardless, and stuff comes up. But the best way to learn is action. So if you have enough cash, go buy a building, start doing it. If you don't, figure out what else you have and, get in the game through adding value to someone who's doing cool stuff.
Yes, yes. Embrace the system is the advice that we give is, hey, there is a system. And when you try to go it alone, you try to do your own thing. Good luck with your program. Hey, you're probably going to make some serious mistakes. And we've seen people, get taken out of the game because they made the wrong mistakes and didn't really get support and good advice. Mm-hmm. So Lauren, any final parting words? How can people reach you? How can we help you?
Yeah, thank you for asking. The best way to reach me is probably on LinkedIn. I'm very active there. I'm posting content, about our deals and about the market in general. So give me a follow, but more importantly, DM me. Or you can email me, Lauren at veritasequitypartners.com. And yeah, would love to hear from people and anyone who's local. We have a local event coming up in December. So anyone looking to get into Seattle, the Seattle apartment market who lives here, would love to host them at one of our events and meet in person.
Wow, that's great stuff. Thank you so much for being on the whole enchilada of real estate investing with Lou Brown. And you have given us some great advice today, Lauren, and look forward to seeing you soon. Yeah,
Thank
baby.
you.
Thanks for tuning in to the whole enchilada of real estate investing. I hope you're feeling ready to take your investing game to the next level. If you're serious about building wealth, you won't want to miss the Millionaire Jumpstart. It's a 3-day live event that's perfect for any level of investor. Whether you're just getting started or you're looking to scale, this can be one of the final steps of making real wealth happen. So, what are you waiting for? Enroll now at millionairejumpstart.com and get ready to make big moves in your real estate journey. I'm Lou Brown. Until next time, keep hustling, and remember, it's not about how much you make, it's about how smart you play the game.